Can you guys hear me now? Can you put in comments if you can hear my audio? Alrighty, sorry about the delay on that with the recording. So let me start over. I would love to go over the top 5 mistakes that business owners make when building business credit. First, let me introduce myself. I'm Mark Tittle, Senior Business Credit Advisor and Finance Advisor here at Credit Suite. And just in case you get disconnected or pulled away, you're more than welcome to reach out to our team here. You can do so by phone 877-600-2487 or by emailing us at info@creditsuite.com. So let's dive right in. Business credit and why that is important for your business. So basically, business credit is credit in the name of the business, not the owner. And properly created business credit separates the personal and the business credit completely. One big advantage is if your business defaults on payments or goes bankrupt, your personal assets are protected. But obviously, it's easy to mess that up. This is not something that's widely talked about or known about in the business world. So here are the 5 ways that can get mixed up with building up credit and how to fix it. So number 1, paying your bills late or not at all. Your personal credit scores come from a number of metrics. We all know that. But business credit depends on one thing: how early or late you pay your credit bills. So obviously, if you pay or miss a bill and pay it late, that's going to do tremendous damage to all 3 of your business credit reports through those credit agencies. So how you fix that? Obviously, paying on time, early the better. That's a very vital thing. There are a few fortunate ways that you can tackle that. Use the technology around you, create an alarm, put it on your calendar, make sure that you pay that bill on time or early. Or if some of you are already going to use your personal finances to pay for that item and you decide to use business credit, you can take that money, just set it aside and pay that bill when it comes out. Or you can shop around for better deals, spend less than you need to. Don't get in over your head just trying to use your business credit. Or ideally, you can repurpose your equipment or just avoid spending in the first place. So buying from vendors and other credit providers which don't report is a huge one. So the old saying, if a tree falls in the forest with no one around to hear it, doesn't make a sound. So there's vendors out there that will be in the business name, but they don't ever show up your positive payments to the business credit bureaus, even if you pay early. So basically, if they're not reporting, you're not doing anything to build up your business credit score. So obviously, make no mistake about it. Many vendors and credit providers don't report your positive payment experience, but the most frustrating part about it is they will report your late or missing payment. So it's important that you know the reporting of that business or of that vendor or credit. That way you're positively building up your business credit score. And I know that seems unfair that you might make your payments early and on time and they don't report that, but they will report if you're late. So that's why it's important to know who you're doing business with. So how you fix that is basically buying from vendors which do report. So you have to seek out the ones that do, so you know that you're going to be able to build up your credit. Those are called starter vendors. Working with the smarter vendors which do report is definitely going to be better than some of the big box or high-end retail credit that does not report. So it's nice to have those big box retailers on your side, but if they're not doing anything to positively report, they're not going to boost your business credit score. So who does report? So let's go over some of those. There's 3 of them that we really like here at Credit Suite. So number 1, Grainger. They sell hardware, power tools, electrical supplies, pumps, and more, and they'll also do fleet maintenance. They report to the Dun & Bradstreet Bureau. The trigger method for them is one order at $50 or more. Then they will report that payment experience, and they'll also approve you for a net 30 or net 60. And you can visit them at Grainger.com to take advantage of applying or even look at their products. Before you qualify, you'll have to have an entity in good standing with the Secretary of State, an EIN number with the IRS, a business address that importantly matches every article out there. So your address has to match on all platforms. You would need a Duns and Bradstreet number, a business license if needed, and a business bank account. And they may ask for additional documents for approval if you don't have built up credit, or if some of your qualifying factors are not in good standing. They might ask for additional documents to back up your business. Some of those might be accounts payable statements, income statements, balance sheets, or other items like that. Number 2, Crown office supplies. You can get just about anything for your office, paper, supplies to run the day-to-day business. The best part about Crown is they're going to report to all 3 of your major credit reporting agencies. So they're going to knock out all 3 of them just with this one vendor. So D&B, Experian, and Equifax is going to show up with this positive payment structure. So Equifax tends to be the most difficult one out there. So that's why Crown is a valuable tool. Make sure you write that one down. So definitely getting with them is a good move. You can go to crownofficesupplies.com to apply or check them out. Their qualifying is going to look like the same as the others. The entity in good standing, EIN number with the IRS. Your business address must match everywhere. Your DUNS number, business license if needed, your business bank account, and you must be 60 days old to apply for them with a $99 annual fee. So obviously they're a good vendor. A lot of great things happen. They're going to be reporting to all 3, so make sure you take advantage of that one. The other, third and final, Uline. They sell shipping, packing, and industrial supplies. They also have the hot needed item right now, hand sanitizers, gloves, cleaning supplies. They report to Duns and Bradstreet and Experian. You can visit them at uline.com to apply for an account or check out their products. And their qualifying needed items, you have to be in good standing with the Secretary of State, EIN number with the IRS, your business address must match everywhere. That seems to be a common theme. DUNS number is needed. Business license if needed, a business bank account, and they will approve for a net 30 at the time of order. They also might go into different amounts if your qualifying factors aren't in place. They might have you spend a few prepaid orders before granting that net 30. So the third piece on how business credit becomes difficult is commingling business and personal credit expenses. This is common. Every business owner, you have to start somewhere. We usually start with our own finances or our own personal credit. So basically, that's what's going to cause the problem. Your business credit file is only supposed to reflect the financial performance of the company itself. So using your personal methods can basically muddy the water a little bit, but there are more problems with creating that. Your personal credit scores, they're going to be in jeopardy. And how they're calculated from your payment history. Also, among other metrics, your credit card usage is going to go up if you're using those accounts to fuel your business. Obviously, they monitor your credit card usage by dividing the available credit into what you've used. So that credit can be from one card or all of them. So you should strive, if you're using personal credit to drive your business, you should try to keep that under 30%. But obviously, if you want to grow your business, that's going to be something that might seem impossible to do. So commingling can be disastrous if your business is ever sued. And obviously, in the times that we live in, that might be something that comes up in the future. So commingling funds and payments, how that might look to the judge or jury if you're in a judgment case, is that if they say you're using your own credit cards to fuel your business, that you should be able to use your own credit cards to pay that judgment back if you lose that case. So obviously, in addition to paying your business assets. So under such circumstances, good luck keeping your personal items, the house, everything that they're going to go after. If you're mixing that in and you're not able to prove that you're separating yourself from the business, that's not going to look good in any judgment. Another thing, IRS is not going to like that commingling one bit. So they're going to ask questions. Who profited, you or the business? Who took the loss, you or your business? So unless you like getting audited, and nobody should, obviously, you're going to want to keep those separated in every manner that you can. So how do you fix that? So resist the temptation to pay for your business expenses with personal credit or checks. Your business has to stand or fall on its own financially. That's the important thing. Once you get credit from starter vendors and other businesses or lenders, use it on your business and stop floating what are essentials interest-free loans to your business. Another way to ensure your finances get and stay separated is to have a separate bank account. That way you can show personal and you can show business expenses separately. Often a starter vendor will want you to have your business, to have the business have its own account anyway. So you're basically cutting out one step of your setup. And then while you're at it, open a merchant account. That way you can take credit cards from your customer. And obviously they're going to spend more if they can use plastic. The number 4 is a 2 new average age for your credit account. So several components to this. Applying for a lot of credit at once means you'll have a number of brand new accounts, which will bring the average age down. And also not using your credit can result in credit providers closing inactive accounts, which will bring your age down as well. So how do you fix that? Asking for too many lines of credit, it definitely signals depression for you and your business. You can also overextend yourself by doing so. Building a successful business takes time, obviously. In the same way, so does building up your credit profile for the business. So as a result, spread your applications for additional lines of credit over time. As a bonus, a lot of inquiries can bring the credit score down. So be patient. Don't apply to every single bit of credit at once. I know it gets exciting, but make sure you spread that out. So how you're going to fix that? Business credit isn't going to be built if you get all the cards and then forget and never use them. The business credit reporting agencies are calculating your scores based on the credit you use. So using your credit, paying it on time, that's obviously going to be a positive to your credit score and or report. You can't control the passage of time, but you can control usage and not applying to every credit card you see all at once. So basically the inconsistent information across every aspect, across the whole board of where your business is laid out. This is going to be your 5th most commonly item that's not looked at. So fraud runs rampant. 80% of every loan or a credit application for a business is considered fraud. So the credit providers won't stop to consider all the ways they could list your business to make sure that it matches up. Even if you write incorporated in one place and have Inc. in another, that could trigger a denial to some of these lenders. So consistent, congruent information makes it fast and easy for credit providers and lenders to find your business and its payment history. So how do you fix that? Consider all of the places where your business has been listed online, all the documents that you filled out for the organization of your business. Those are your website, loan, credit applications, even online search engines like Yelp and Google reviews. Take the time to keep all of those places. Keep them in place. So Google your business often. You'll find that you'll see those early indicators by doing so. Claim your profile on review sites so you can better control how your business name, address, and other items are presented. And obviously copy and paste the information. If you rely on typing it all out, our brains sometimes work faster than our fingers. You might accidentally put in a simple punctuation error that could cause you to get turned down. And don't chance on an error while typing it out like we just said. This also means you need to update your information whenever it changes. That's the important thing. All of these different articles that we update, and we don't think to go back and change them. So make sure that you keep a tally of all these different items. So when you do change an address, a phone number, things like that, you know to go back and take care of that. So a couple little bonuses for you to help with everything that you're going to be doing with your business and over time building up to credit. The biggest thing is not monitoring your credit. You don't know what's out there about your business until you search for it. So obviously, if you search and you find errors, you can jump on that quickly, get them corrected. The last thing you want to do is apply for credit and have the creditor look and see those errors and turn you down. And yes, you will find them on those credit reports. There are going to be errors. If there are, They are committed to making it accurate, so they will correct those if you file for that to be done. So one way we're going to help you with that is basically being able to see what shows up on your credit report. If you go to each one of the credit agencies, that's a little pricey to pay for that monitoring with each of them. We have something here that's going to help you, and I think you'll love it. We actually have a platform that's going to show you all 3 of your credit bureaus and ultimately allow you to spend less money in doing so. So if you go to creditsuite.com/monitoring, you can sign up for our form where you're going to have your own dashboard and be able to monitor that credit from month to month. And you keep that as long as you need it. Bonus 2, so choosing the wrong business entity. Here's another tip. A lot of businesses start out as sole proprietor. There's a lot of great businesses that do so. Nothing wrong with that. The only difference is that there's no separation between the owner and the business with this setup. Another used item is a partnership, where that entity, where the ownership and the business are more intimately connected. So with either of those, there's no real separation of the business versus the personal credit. That's going to be hard to do so. So how do you fix that? A corporate structure. One of the most important things you can do as a business owner is identify your business as a corporation. That way you know that every single thing that you do moving forward is able to go under the business name. So it has to be its own entity. You can select a C Corp, S Corp, or even an LLC, a limited liability corporation. But obviously that's going to be up to you to decide which one of those 3 that you do. So we highly recommend working with your corporate lawyer, even an accountant, to determine what's best for your situation. So let's recap here a little bit. Several ways you can mess up your building up business credit. All of them, the good news, is in your control. So be patient, be responsible with your finances, and the organization will go a long way. Our expertise and our experience, this is what we do. We know all about fixing and preventing all of these mistakes. So if you need help, you need additional information, you have questions, please feel free to reach out to us. You can call one of our team members right now at 877-600-2487 or email in at info@creditsuite.com. And we look forward to bringing more videos here in the future. Thank you for your time today. Have a good one.